James, in terms of what we're seeing, there's talk a little bit about this coordinated action coming from the central banks. Now, this really reminds us of 2009, January 2009. Would it give you a little bit of hope that there's extra liquidity being pumped there across the board, or actually does it mean that the situation is really pretty dire?
Well, I think one thing has changed very dramatically from the early days of 2009, and that is that governments themselves have, in a sense, spent all the money that they have available, and therefore it's not reasonable to expect fiscal expansion. And indeed, when one thinks about the Greek crisis, which is #1 big challenge of the moment, it's very clear that the austerity programme is foundering. The IMF are deeply unimpressed about the lack of traction. But if one anticipates that the Greeks have to have a downturn of wages in the order of 15% to get back to being competitive with Germany, that implies that they're probably likely to see a recession or as deep as 5 to 10 percentage points. Now, against that environment, very difficult to see how they're going to get more tax revenue, and therefore it's down to central banks. And it's very clear, I think, that we have to have coordinated central bank activity. Having a single central bank...
Because nothing else will do.
Absolutely, because it's a global problem, and therefore individual economies simply cannot deal with this issue one-on-one.
Now, how do you deal with this issue on a day-to-day basis? Are there stocks that you prefer, and what exactly do you look at to say, yes, I want to put my money in there? Is it valuations? Is it your faith in the management and the people that run these businesses?
Well, I think first and foremost, in a climate where there is real financial distress and where governments and private individuals, highly leveraged, need to reverse that situation, it's fascinating how many companies have really robust balance sheets and ongoing, very strong free cash flow. So they're constantly topping up the pot. And I think therefore what we need to look for are companies that have reliable cash flows. The economic environment is not going to be strong, but also, in a sense, are in charge of their own destinies. And I think that is a combination of strong management, good product lines, creditable market strategy, and also exposure to the fast-growing parts of the world.
And I was looking at some of your top and favorite stocks. It has nothing really to do about a particular industry group. You're really selecting companies that you think will do well. Talk to me a little bit. I mean, we have a Chevron, for example, in there. Rio Tinto, so a bit of mining and a bit of oil companies.
It's very interesting. When one thinks about the productive industries, what we're looking for are execution strategies, companies that are very focused on shareholder value. And, if one thinks about BP sits at a 20% discount to its global peers, and I would argue that it sits at that discount simply because the company has not put forward a credible strategy that has excited the market so that we can understand what BP is really worth. Chevron, in contrast, along with ConocoPhillips, have said, let's do it. This is what we're going to do to create value.
We also have, you have Shell actually in there, but on the other side of things, you have a little bit of pharmaceuticals. You have AstraZeneca and Glaxo.
I really like pharmaceuticals. I see transparency of earnings. I see lots of credibility and scope for upgrade. And I see good strategies now coming forward in terms of creating shareholder value. Much less focus on science, much more on shareholders.
But so do investors need to be a little bit more defensive in this kind of environment?
I think when there is so much uncertainty, defensiveness really matters. And it's a very interesting environment where actually growth is very cheap relative to value, and I think good quality growth prospects will be much better rewarded in the years ahead.
Reckitt Benckiser, this is another one that you like.
Reckitt Benckiser, return on equity is the absolute most juice there. What we're looking for are companies that really know how to turn revenue into profit.
The banks, you'd be staying away from them completely because we don't exactly know how much these liquidity problems will create problems in the future.
What I find fascinating about the banks is there really will be some great winners coming out of the downturn, and clearly some big losers. And I think the big winners will be the names like HSBC and Standard Chartered here in the UK. I think People's Bank of China, OCBC, and I think some of the other banks in the emerging economies have strong balance sheets and growth credentials. They will prosper.
But James, you're not buying any of them.
Well, they're not on the highest buy list because I just don't think that market sentiment is supportive of them, but on weekdays we will absolutely be buying more.
All right, James, in terms of what we're also seeing, in the next, if you have to look at the next month and a half, what exactly do you need to hear from governments to give you, I guess, that extra support or that extra confidence of going and buying extra stocks on the market?
Well, I think the first big challenge is, of course, the Greek crisis, and I think the Greek crisis has the real risk of blowing into a full-blown disaster, and that needs to be absolutely dealt with, essentially, I think, through the ECB rather than through governments, because this is an issue of credit and liquidity. And the ECB needs to step up to the table, and sovereign parts of Europe need to say, actually, guys, we really do care about it. So that's number one. Second, I think we do have to see credible strategies to address the long-term liquidity and credit issues. And I just don't think that austerity is the right strategy in the near term.
James, are we expecting something from Jean-Claude Trichet today? I mean, you're saying it's the central bank's role, or will there's no other option, I guess?
I expect very little from him today. I think
so not a U-turn in interest
rates? I think the same with Mr. Bernanke. I mean, I'm fascinated by the story that Morgan Stanley have put out, that there will be coordinated action as early as this weekend. I'm absolutely not expecting that. I'll be delighted if we see it.
All right, James, thank you. James Bevan there.